S. Krishna Kumar, Head Equity at Sundaram Mutual Fund, is joining in. Mr. Krishna Kumar, thanks very much for your time. Mr. Krishna Kumar manages two funds. Personally, he oversees two funds, and I just want to put up some data on what these funds have done. So the Sundaram Select Mid Cap Fund, which was launched about 12 years back, and the graphics will come up on your screen, since inception has returned about 31.4% on a compounded basis over the last 12 years since inception. The benchmark for this fund, the benchmark is the mid cap index. In the same period has compounded about 21% or so. Last 1 year, it's up about 67 odd percent or so, from June 2013 to June 2014. But I mean, in that period is very short, and most funds of the mid cap variety have done very well. The other one is the Sundaram Smile Fund. This was launched in 2005. For this, the compounded annual return is about 19%. The benchmark is returned about 11.5% or so. So, I mean, they have over a period of time since inception, both these funds have meaningfully outperformed what the benchmark has done. Mr. Krishna Kumar, congratulations. Thanks for being here. I just want to ask you if you believe that we are starting a fresh upswing, a fresh cycle up for the market. Your mid-cap funds can better the track record that you've given from the time that they actually came into being, or do you think over a period of time, I mean, these returns will get evened out? What's your sense?
Yeah, just to set it right, it's a 31% CAGR returns over the period since inception, which also means 10% per annum beat on the benchmark. So that's the return that we have generated, basically. Yeah.
But what do you foresee for the future? You think, I mean, some believe that mid-cap, and you operate in the mid-cap segment, right? Exclusively in that segment. That mid-cap valuations are no longer cheap. They were trading at about, the mid-cap index, for example, was trading at about a 50% discount to large caps. That's been largely narrowed down. I think they're at par now. What do you think it's going to be a challenging period from here? What's your sense?
I think, over the last 7 to 8 years, the fund size on average has been around 1,700 to 2,000 crores. So, we've been dealing with this large AUM even in the last 8 years. So, we've definitely have a process in place to manage large size mid-cap funds. And I think the performance over the last 7-8 years also goes to give you a sense in terms of the capability of the process that we engage in. The learnings definitely have been, well ingrained into our investment process. We are very cautious in terms of the risks that we take. So there are a lot of checks and balances that we have in terms of sector allocation, stock selection, and individual exposures that we take in terms of the exposures to single company holdings, etc. So I think that's going to really help us go forward.
The other issue, Mr. Krishna Kumar, has been the fact that you've been constantly seeing redemptions. I mean, I think that still the pace might have slowed down a little bit, and as a result, money has gone out and not come in into mutual funds. Where do you think we are with that process of redemptions and fresh money starting to come in?
I think over the last 2 months, the tides have changed, and we have been seeing net new cash as an industry and as a company. And we do see that with good returns in equity markets, HNIs and institutions and retail investors will look at equity as an asset class to get back into in a serious manner. India has underinvested in equities in the last 5 years. Household savings going to equities is probably less than 0.5% last year, and we think it will get back to much higher levels. And a 1% swing here would mean equity markets get an inflow of about $25 to $30 billion over a 12-month period. So we are very confident that inflows will sustain, given the fact that the economy has turned around. A government with majority is in place, and with focus on execution and good governance. So we see a whole lot of improvement in confidence across businessmen, industrialists, and investors at large, both India and overseas.
Mr. Krishna Kumar, would you agree with many of your peers who say, well, corrections will be very shallow and the market basically just will keep moving higher? Maybe the pace won't be as stellar as we've seen over the last 3 or 4 months. Do you agree with that view?
Yeah, I think there is a lot of money waiting to come to a destination like India, as we expect a 6.5% to 7% GDP growth to come through in FY16, 17, 18. I think the earnings growth potential, is definitely far superior to many other countries, both in developed and the emerging world. And FIIs are definitely conscious of this. We also have a market where valuations are quite reasonable, given the kind of growth that the country could see over the next 3 to 5 years.
I got that. Since you operate in the lower market cap sort of companies and you deal with them, a lot of what you generally describe as junk stocks, right? Very low earnings, returns, high beta. I mean, they've done very well along with the rest of the market. But I think over a limited time frame, they've outperformed greatly. You think that phase is behind, where basically everything went up? You bought anything and it went up. You think that phase is behind?
Yeah, I think the first trade that happened was a macro trade, as the entire cyclical SPAC moved together with all stocks going up, and the poor quality ones probably doing a little more than higher quality stocks. As we see the markets now the differentiation will come through. Investors would become far more choosy after the first round of movement, and companies with reasonably good managements, with track record, with better financials and better earnings visibility would be the ones that would see a lot more money flowing to them.
Mr. Krishna Kumar, what about infrastructure stocks, which this government, of course, has been talking about quite a bit, that revival is required? RBI's eased norms for lending money to the sector. What is your overall view? Do you see a revival?
I think absolutely. Definitely the current stress in the system has been an overhang on any businessman to look at new projects. I think with better infra financing norms and the ability to refinance the projects for a 20-year to 25-year time frame, the balance sheets and the cash flows of companies look far better in relation to the debt that they're carrying. This also offers the companies to look at more projects with the current equity capital in hand. Plus, I think the stress levels in the system is also going to reduce a lot, thereby improving the bank's capital adequacy and its ability to lend for more projects. We definitely see the foreign players playing a larger role in all this infra bond, and we see the recent budget wherein a listing of Indian bonds and G6 on the Euroclear platform is going to really be a game changer, which will improve the access to infra financing for the sector.
Mr. Krishna Kumar, thanks very much.